Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, and thanks for tuning in for our 4-year anniversary episode with Jack Schwager. Honestly, I can't even believe it's been 4 years already on Futures Radio Show. I am so grateful and thankful to all of you that tune into the show, and I want to thank all of the guests that have taken time out of their busy schedules to speak with me. I truly appreciate it. I also want to give a special shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. Each one of these sponsors truly cares about futures traders, and they all have great people that I am truly honored to work with. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. As I said, this is a special episode, not only because it's our 4-year anniversary, but it's with the person who has had the most popular book mentioned by guests on this show. That book is Market Wizards by Jack Schwager. Jack is currently the Chief Research Officer and founding partner of FundSeeder. First off, he shares with us on why he wrote Market Wizards, and then he tells us how he went about picking the traders for the book. We talked about the markets going from pit trading to electronic trading, which form of analysis, technical or fundamental, that he found the top traders that he's interviewed chose over the other. We talked about how he and the traders he's interviewed and knows go about executing a bullish or bearish bias of the market. We chatted about a trader's mindset from 1989 when he wrote the Market Wizards book to a trader's mindset of current day. Finally, we discussed traders having a diary, and Jack gives us an update on what's happening at FundSeeder. As usual, thank you all for listening, and please enjoy this episode. Jack, welcome to the show.
Thank you. Glad to be here.
Well, I'm glad you're here, Jack. I've done over 200 plus episodes on Futures Radio Show, and on each show I ask traders their favorite book on trading, and your Market Wizards book is by far the number one book, so really, really great to have the man here today.
I appreciate that. Thanks. Good to hear.
Now, let's just jump right into it, Jack. Let's start off with the Market Wizards book. It was published in 1989, so we're actually coming up on 30 years since your book was published. So I'm curious, what was the driving force behind you writing the book?
Well, I had the idea actually for several years of doing a book going around the country interviewing great traders. I knew through fate or luck or whatever, I did know some individuals who were great traders, and so I had a head start that way. But I was, at the time, a director of research at a major brokerage firm, which is by itself more than a full-time job. I had taken the sabbatical for a year, a couple of years earlier, to write a tome called A Complete Guide to the Futures Market, more of an analytical book. And that did well for that type of book. And what happened was I was asked to lunch by some publishing company, and they pitched me on, hey, this book is, you've done this book and it's good. We'd like you to be like an editor in chief of a whole series of analytical books, one in each market. And my response to them was, look, hey, I've done that. I took a year sabbatical. It's not a way. You only do that. You don't do that for money, for sure. You don't do that to get wide readership. You just do it to say, hey, here's the best I can do in the field, and hopefully something better than's been done. So that was the reason I did it. I didn't do it. I understood that the more, in fact, you can say that the number of copies a book sells is probably of that type of book is inversely related to the number of equations. So I could have saved myself a lot of work, and sold more copies if I made the book, more low level. But in any case, I didn't want to do that again. I didn't have time to do that again. And I said, but I have this idea, and it's an idea, like I just said. So he said, hey, that sounds interesting. And so, and I had the name of the book even. I had the title well before I started it, which was Market Wizards. And they said, come on, would you want to do it? And I said, well, I don't know. I got a full-time job, whatever. And, anyway, but the idea of reaching a broader audience, I always intended this to be a wide audience book, was appealing, and I did like writing, and so I agreed. And I basically did that book nights and weekends. And well, maybe less so now, 30 years later, but when I was younger, especially, I was able to focus very intently, and so I could literally do an all-nighter and get a lot done. Not maybe the healthiest thing to do, but I got a lot. And on weekends, I through intensive spurts, I was able to do most of that. Do the book. So anyway, that's how the book came about. And the motivation was, as I said, to write a broader audience book, and also I thought it was a great excuse to pick the minds of these people. I thought it'd be a good project that way.
Well, let me follow up on that. How did you go about picking the traders for the book?
So, like I said, I had a head start. I knew Michael Marcus, who was chapter 1 of the first Wizards book, and Michael had the analytical. My first job on Wall Street was a research analyst, and Michael was leaving that position, and I was replacing him. And he was leaving to become a trader. We met, when he was moving his stuff out and I was moving in, and we talked a little bit. And then he was still in New York for a few years, and we used to get together regularly for lunch, and stuff. And he got a trading job, and I soon, I quickly discovered that he had a great talent for trading, and was no matter how much work I would do, he was whenever we disagreed on anything, he was right, I was wrong. So. Anyway, I kept in touch with him, and he went on to Commodities Corp, and he became phenomenally successful. So by the time I did Market Wizards, he had literally turned this $30,000 account they gave him into $80 million, and he had done that with them pulling out 20-30% a year for expenses. So this is a guy who, and this, of course, the markets were right for his style and everything else, but he was making triple-digit returns, year in, year out. I think wouldn't be surprised if he had years with 4-digit returns. He was just incredible. But in any case, I knew him. I also knew Bruce Kovner, because Bruce Kovner was hired by Michael and was also a client. And I was actually hired by Michael after I did the sabbatical. Before I went back to Wall Street again, I worked at Commodities Corp as for Michael, for a little over a year. So I knew him through that. So I had the Commodities Corp Association. So I knew Michael and Bruce, who were both in Market Wizards, and arguably two of the best traders ever. And then through them I got at Cedar through Michael Marcus, because after I interviewed Michael, he was reluctant to do the interview. Finally agreed. We spent a whole day, literally a full day, interviewing. Through walking, sitting, meals, everything, and just kept the tape recorder running. But at the end of the day, after we had dinner that was cooked by his chef, he pushes a chair back and he says, you should speak to Cedar. And I said, who the hell said Cedar? And he says, well, he's the best trader I know. So when some guy who's turned 30,000 to 80 million tells you about the best trader they know, you're interested. And so he got Ed on the phone, and instead of going back to New York, I changed my flights, and Ed agreed to do it, and sort of flew out to Nevada to interview Ed. So there's like 3 as an example. There are other people, and every time I interviewed somebody, I would ask if they had any recommendation. There were some people I just didn't know, but knew of, like Jim Rogers. I knew Jim Stewart was teaching a course in Columbia, and so what I did is I sent him my first book, A Complete Guide to the Futures Market. Say, hey, Jim, I'm not a journalist. I'm really, somebody who's, market, interested in markets. And I want to do this book, and I explained, in the letter with the book, and he agreed. And so, that was the way I kind of pieced it together. But I did have a head start. If I didn't know anybody, it would have been, maybe it would have been impossible to do.
Have you kept in touch with any of the people you interviewed in the Market Wizards books? And if so, how are they doing?
Yeah, not closely. Some of them, like Michael, I've seen him several times over the years. Last time might have been 6 years ago. I saw same with Ed Sekotis, periodically I've seen him. We've gotten together when we're in the same place, and again, I saw him the same trip, because oddly enough, he and Michael ended up moving to the same town. Not because of each other. I don't even know if they knew they were in the same town, but I knew they were. There were other people from the other Market Wizards books I occasionally have kept in touch, spoken to, but nobody that I've been in regular contact with, or at least no longer am. Maybe years ago I might have had contact with some, but now it's been many years since Bill Lipschitz from the New Market Wizards. I've seen a number of times and so forth, but again, it's been years since I've seen him. So that's pretty much it.
So I'm curious, when you see some of your old friends that have been in the industry and the business for a long time, and you guys are sitting down talking, I'm wondering, do you guys talk about, and I'm wondering what your thoughts are as well, on electronic trading, specifically algo, quant, and HFT, now having such a huge presence in the market?
I don't remember that being a topic of conversation. I don't, I don't recall, I don't think that's something that we talked about specifically. I don't think it's as big a deal as people make it out to be. Your career, you came up from the floors, right? So,
yep.
Back in those days, we had floor brokers who were the middlemen, and now we have electronic traders who are the middlemen. That's the way I see it. And this is an area where you have more expertise than I am. Tell me if I'm wrong about that. Is it just electronic bid and ask making based on different, obviously based on a lot of math instead of herring, seeing who's buying, who's selling, and stuff like that. So the methodology has changed, but isn't it just another middleman function making a market? And if I'm wrong, tell me how.
Well, my 2 cents on this is that there's always going to be somebody who has a speed edge over you. When I was in the pit, and the reason why I struggled initially at the beginning of my career in the pit, it was because the people that were closest to the brokers, if we all said buy them or sold, the person closest to the broker got the order. So nowadays you have, these machines that are on the bid or offer faster than you are. So I've always felt like that I was never going to be first to get hit on the bid or the offer. So to me, it's not as big of a deal. I agree. My strategy has always been based upon trying to find, where I could have the highest probability of being right, finding a range of execution and not being held by one price. So I didn't have to be first in.
Right. Yep.
So going back to you interviewing everybody and speaking with everybody, who had the simplest or even that pure gut instinct process out of all the traders you've interviewed, and actually even traders that you've met?
Well, pure gut, the one who stands out is really Marcus. I hesitate to call it simplest because he had his basic methodology. It's good conceptually. Yet he said really good trades really have 3 things. They have the fundamental. They have the fundamental driver. They're technically sound, the charts, however you want to phrase it, and the market tone is behaving correctly. It's responding to news the way it should respond, in line with the fundamentals and technical. And when all those strings come together, that's a great trade. Now, there aren't that many of those trades that occur, so we do other trades, and those other trades probably, he himself would admit, probably were not much better than break even, and his real money came from the trades where everything was co-aligned. But those were the main ingredients. Now, it's not simple, and there's three major ingredients. Compass is fundamental and technical and watching the market behavior. However, when you get down to it, when I say it was really gut, is because we deal with fundamentals. I mean, it's like 100 fundamentals, right? And I come from an economics background. My first job, was jobs on Wall Street were all analytical. And I would do all this research. I remember specifically, and I use this example because it's absolutely perfect. There was cotton. One of the markets first job that I had to analyze was cotton. And so coming from an analytical background, I went through like every single cotton year since the World War II. And what I discovered in my research was that literally only about 3 of the years were truly free markets because government subsidies, government programs were really the supporting element. So the market never was able to go to equilibrium. It was all you were seeing was the government program. So there were only about 3 markets that were free markets. And one of those was a bull market, which was similar to the current year at that time. And I used that as an analog. Now, I was absolutely right in my analysis. I was even right in the analog year. But the obvious conclusion I should have reached was there wasn't enough data to really be very confident about anything, because 3 seasons is hardly a reliable sample. But anyway, so that was I was operating in. Then at the time, cotton was 25 cents, and I thought in the prior bullish season that was similar. It went to 35 or whatever, 33, 34, 35, something like that. And I thought, well, it's going to go up there, and then it should meet resistance and so forth. So that was my vision of the market and so for initially, of course, I was right, and I made money, and then I, when it got to mid 30s, and I started looking, for it to was topping, and then I got short, and I thought, okay, this is going to work, this is where it should top. But Michael all along was blindly bullish, and I remember arguing with him, and I said, it's at the peak, highest level it's been since, whatever, and the fundamentals are now more bullish than this year, and he said, but he had, out of all the fundamentals you can look at, he just understood that was the first year PRC, which what China was called in those years, was the first time they were a buyer in the markets, and they were a big buyer. And he understood out of everything that was the one critical element. And so he was bullish. He was bullish. He stayed bullish for the 30s, the 40s, the 50s, the 60s. That market went up to 99 cents, which was the highest level since the Civil War, which was kind of artificial, obviously. So he understood that just being able to sense that what was the right market. It's not because of the complexity. That's why you say he had that gut feeling. He just knew how to. And in that Market Wizards interview, I could remember one in particular, which is just astounding. He's sitting there watching CNN. Well, it wasn't CNN at the time. Whatever news program it was, and it was like 2 a.m. or whatever his local time, and the Soviet Union just invaded Afghanistan. He immediately picks up the phone and buys thousands of contracts of gold in Hong Kong. He just had that instinct, just incredible gut instinct of what to do and a clear vision. So he's like the best example I can give of that type of trading.
Now, with all the traders that you've interviewed or that you just know in general, do you find that more traders are fundamentally based, technically based, or a combination of both?
When I started, I believe it was more fundamentals. As time went by, it became more technical, and a lot of hybrid. I would expect today I think the balance, among great traders, I think if you went through all my Market Wizard books, all 4 of them or whatever, you pick and you divided, you get people, by fundamental, technical, and both. I think you'd find, I've never done the exercise, but I think you'd find that there's probably not too far from an equal distribution of fundamentalist, technical, and both. Maybe both is a little bit larger, but it's not far from split between them. So I don't. And one of the points I always make if I give a talk on Market Wizards, almost invariably I will try to get across the point that it's not that fundamentals are better. It's not that technicals are better. It's not, not even that both combined are better. It's simply one of them is better for each person, and it's for you to discover which. But you can do extremely well with fundamentals. You can do extremely well with technical, extremely well using both, and you can lose a lot of money in all three of those as well. But which one is right, I think, really comes down to the personality, to what a person, what really resonates with the way they look at the world and what works for them. So it's like, prescription for glasses. I have a prescription and it works exactly right. But if I give somebody else who has glasses my prescription, they'll bump into a pole. You can't say that this prescription is the right. It's right for me, and it's exactly the same way with methodology. So I would discourage people to think one methodology is right or wrong. I would encourage them to try to discover which is the right methodology for them.
I 100% agree. And I want to go back and pick your brain a little bit. You mentioned how you were talking about yourself and other traders, and you guys were talking about being bullish or bearish, obviously talking about primary trend. And I'm curious, when you had that thought about the market, how did that trickle down into execution? So if you or one of the other traders that you were speaking with was bullish or bearish on a market, did they only look for shorts? Were they trading both sides of the market? How did it trickle down into them actually going about executing?
Well, first of all, I think every trader I ever interviewed was both long and short. With rare exception, there may be some were much more long than short, but they were all long and short, especially the futures traders, obviously, always. So that doesn't that's not a relevant point. How they execute, all different ways. They might execute because of the way the market behaves. A lot of time that comes up if you go through all the books and all the interviews. You'll see there's a lot of instances where the market, and it could be opposite to the position held by the trader. In fact, very often it is. But the fact that the market is not behaving as expected to certain events is kind of a very major trigger to take a position or liquidate a position or reverse a position. And other than that, people have different trigger points or whatever. But I think a lot of it comes down to just that part of it. A lot of time comes down to the feel for the exact point of entry.
Yeah, see, the reason why I asked that is because it sounds so familiar to myself and my friends. We always look at a market, and I will say, like right now, looking at equities charts, and the S&P is bullish. So to me, on my strategy, I'm more aggressive with longs, less aggressive with shorts. Like treasuries, I feel like I've been bearish for so long now. It's been at least a year, and even though I am a day trader, I know that I am not in a hurry to pick bottoms in a market that's bearish. That's why I was asking you about the execution, if they thought that same way.
And that's wise. And I think that's wise. I think that really makes sense. And the fact that you are a day trader and say that, I would totally agree. Because there is a dominant trend, and it's better to be more skeptical of trades against than trend. And it goes into human nature. It really goes into human nature to try to be against whatever the trend is. People like to think that they're smarter than everybody else. I mean, that's just human nature, right? So I think that there's more of a tendency for people to want to go counter to a trend. They pick the top, pick the bottom, whatever, than to trade in the direction of the trend. So and human nature, I emphasize that, is because human nature as actually comes out very much in, say, the Eckhart interview, which I believe is now Mark Wiz. I believe that's new Mark Wiz's, but he makes a comment saying that human nature is so poorly attuned to trading that people will do worse than random. Like, he's literally saying people will do worse than the monkey throwing darts at the stock charts, at the stock quote chart page, because human nature will lead them to make decisions that have a less than 50-50 chance of being correct. And so fighting the trend is kind of one of those, just one of hundreds of things that would fall into that category.
I can tell you, I've definitely been guilty of that in my career.
Trying to get revenge against the market. Right?
Exactly.
I'm right on this trade. The market I just lost. I'm going to get the money back. I'm going back into this market. It's like all of those things. Those are all human nature, and those usually tend to be things that cause more losses.
Yeah, we used to call that he's in his own fast market. The fast market light wouldn't be on in the pit, but a guy would just be trading, just buying and selling everything. You should be looking at him going, man, just take a break because you are in your own fast market. Now, you mentioned human nature, and I want to stay on that a little bit because I already mentioned that the Market Wizards book came out in 1989, so just about 30 years. I'm curious, what are the most noticeable changes that you've seen in traders' mindsets since writing the book?
Yeah, well, here's the interesting thing. The original Market Wizards did an update on it in 2012. And for that, I added, I think, a chapter at the end about what has changed, or more conclusions or whatever. So I think that's one change. But one change also is I added a preface in, hey, I'm writing this book, 25 years later, and the interesting thing I remember at that exercise is that there was virtually nothing in the book that was any different, that I would say is different today. It's still, when I was going through it, other than, of course, there were stories about the floor. The floor doesn't exist anymore. But I'm talking about when you get down to the essence of trading, was anything really different than it is today? And I was really struck by, hey, other than the things that have gone by the wayside and things that have come like electronic trading, but the actual trading itself, I didn't identify anything at all that was really different.
Yeah, no, that's very interesting hearing you say that. Now, speaking with all the traders that you have throughout your life, did having contact with some of these top traders in the industry influence your style?
Well, of course. My original motivation, one of my original motivations was to kind of, as I said, pick the brains of these traders. So, of course, and I traded. I should make clear that never in my whole career have I been a in quotations trader. I've traded, and I've traded. Certain times I've traded, more, and sometimes I've not traded at all. And so, but when I was trading, certainly I was influenced by the people I interviewed and the wisdom I got out of those interviews. So absolutely.
So you mentioned that you wouldn't really classify yourself as a trader, but you have traded, and I think that everybody that has traded believes that they have an edge when they go about executing their trade, because otherwise they wouldn't do it. They think that they have an opportunity to make money. So I'm curious, in your trading, what gave you your edge, and how did you go about finding it?
Yeah, well, I went through a lot of different phases. I started in the fundamentals, which for me were not right, and I discovered that, and I went to technical, and that was certainly, so going to that, there was a fellow who worked for me who became a very close friend, unfortunately died a couple of years ago. The name is Steve Kronowitz, and he was my one analyst who was a technical analyst. Everybody else who was working for me was a fundamental analyst, and I noticed that of all the analysts, he was the one who was right most. And so by far, in fact, the other ones, I don't even know if they were 50-50. And I finally said to him, Steve, I was always skeptical coming from like an economics background, analytics, I was skeptical of technicals being mumbo jumbo type of thing, whatever. And so, but I was open-minded enough to ask him, okay, well, I saw empirically he was doing better. I said, well, show me. And so through him, I got influence on, through chart, to begin using chart, and I learned chart analysis from him. And most, very importantly, I understood. What I got was I got an understanding of why chart analysis works, or can work. I shouldn't say it works. It won't work for everybody, and it doesn't work with any great percentage. And to the degree it works, it depends critically on the practitioner. But the reason why it can be an effective tool, is maybe a better way to say it rather than it works, is because the one thing, it's not mumbo jumbo. One thing you can say about a chart is it reflects everything that's done in the market. So you may not have, maybe there are people who know more than you. In fact, of course, there are people who know more than you, and all of those things. But what you can know that everybody else can know is the effect of what everybody's buying and selling has done, and that's the chart. So there is a real rational reason why charts can embed important information. And if you can become a practitioner that effectively can use that to be better than a 50-50 tool, you can do very, very well. A good example of that is somebody like Peter Brandt, who's a friend of mine, also lives in Colorado, but who I've known for a number of years. And actually, he should have been in my Market Wizard books. And if I do another one, I would put him in. But he's strictly a chartist, and he's been doing it for 40 years. He was also a Commodities Corp, although not at the same time. And he basically just uses his knowledge that he's gained over all those years from chart analysis with very, very rigorous money management. And he's not won every one of the 40 years, but he's done very well. So anyway, the chart, that was one thing. So being able to use chart, and the idea there is to identify points where the expected gain is better than, meaning your probability there may be trades where your probability isn't better than 50-50, but if you're right, you'll make, multiples of what you're wrong. That still gives you an expected gain, that's positive. So being able to use charts to identify points where you think you have a reasonably better than even expected gain, and most importantly, combining that with rigorous money management, like that. So that now that's not a big edge, but it's what I do, and it's the only reason I'm a lousy trader. And I don't have the patience. I have a lot of trades that are not amenable to trading, but the only reason I'm net profitable is because of combining those two.
Now, out of all the traders that you've interviewed and even know, what percentage of them had a diary?
I don't remember exactly how many people might have mentioned it in an interview, but one thing that does come up many times, and it comes up extremely prominently in the Ray Dalio interview in the most recent Market Wizard, which is hedge fund Market Wizards, where it comes up in the context of mistakes. And somebody like Dalio, who, for your listeners, who I assume everybody would know who Ray Dalio is, but the founder of Bridgewater, which is the largest hedge fund, most successful hedge fund probably in history. So his big thing and the way he ran his firm is instilling in people the importance of learning from mistakes. And one of the ways of learning from mistakes is to keep a diary. Now, the diary doesn't have to be exclusively in your diary. I wouldn't recommend putting in all your trades by any means. Unless you trade very rarely, that could become onerous enough that you'll stop doing it. But the idea here is any trade that's meaningful. Now, in most cases, those are going to be losing trades. Like you learn a lesson. Okay, I did this. This was not a plan. For example, this was not a planned trade. I was watching the market. I saw this. I had an impulse to do it, and I did it, and I lost money. But it didn't follow my normal routine of picking a trade. And don't do that again. Don't take impulsive trades, right? Or things like that. So I'm giving you just an example of thousands of examples of what it could be. But for every trade, it's going to be different. So if there's ever a trader where you recognize that you've done something wrong, you write it down in the diary. And of course, periodically review that diary, and that's very important because that reinforces the message. And so the idea there is to eliminate or at least drastically reduce repeating the same mistakes, and that's critical to becoming a profitable trader. So that's why it's so important.
I want to move on and talk a little bit about FundSeeder. Can you tell everybody what it is and give all of us an update on how things are going with it?
Sure. So FundSeeder, basically the concept there is to create there's both an investment company that will be, do the allocations and the connections with investors or construct the funds. But the initial part of the company was a separate company, FundSeeder Technologies, constructed a website to attract traders worldwide. And the idea was to find undiscovered market wizards, if you will. So the idea is, the way Wall Street works right now is the largest hedge funds, the largest traders get the overwhelming amount of money, regardless of even if they're not doing that well, And there's lots of traders out there who are actually doing extremely well and have good records and have good methodologies, but they could be, first of all, they may not be in a country that has any developed capital markets. They don't have access to capital, no matter how good they are. They'll never. And if they send an email to somebody, hey, here's my track record. The people who allocate get like thousands of these. They ignore them. So there's no way for them to get anywhere. So the idea is to create a website that would be a central global place that traders worldwide could link their accounts, demonstrate, because the accounts link through the broker day by day, that they've got, that they're doing, they've got something, they've got the edge, showing up in their daily equity curve and the daily stats. And so the FundSeeder technology, and then provides a lot of analytical tools, a lot of graphic tools, all for free, so traders have a reason to go on besides just having a shot at getting money allocated. And the idea is that that company discovers the traders, and then FundSeeder Investments can use that database of discovered traders to form fund products or to connect with investors. And where we are right now, I can't mention, we are towards the latter part of negotiations with a very major investment I just call it a major Wall Street, a recognizable Wall Street name. And the plan would be, if all goes through, hopefully, we're pretty close to, we've gone through so many stages. We're really at the final end here. Assuming it all goes through, they will then sponsor a fund that will use the FundSeeder index as the investable product. And the FundSeeder index is it's actually an index that I constructed a few years ago, little after we started the company. And originally we were using white label technology, which we ultimately completely replaced, except for one metric called the FundSeeder score. But everything else was kind of changed. I didn't like it, and I redid it. But they had an index, and their index was, there was like the top 5% of traders. And I looked at that index, and and I said, hey, I told Emmanuel, who's my partner, Emmanuel Bellari, was the founder. He's the CEO. He was one who brought me in, along with James Bibbings, the third partner at the start. Anyway, I told him, hey, Emmanuel, this is ridiculous. You could take 5% of any list of traders, at a given point in time, and take their history in the top 5%, and it's going to look good. What does that tell you? It doesn't tell you anything, because that 5% is going to be constantly changing. So I said, this is just hindsight nonsense. So one of the things I did was to completely throw that out, and then create an index where the way the index works is at the end of every month, you identify the best, the top 5% of the traders at that point in time, and that group of traders then becomes assuming equal allocation, becomes the traders who define the performance of the day-by-day performance of the index in the following month. So it completely eliminates hindsight, and it changes every month. Now, that index has done remarkably well. It's coming on to 3 years in track record. And it's not only that, forget about CTAs and, futures traders have had a really tough time. So forget about doing weight. That's a very low bar. So it's obviously completely blown that out of. But it's actually even done better than the S&P. Well, the S&P now coming up towards top, it's probably pretty close in terms of cumulative performance, but it's done that with tremendously lower volatility. So it's been an incredibly, good performing index, and so that would, if all goes according to plan, that would be the first product, and so that would be the initial allocations begin. And of course, there's lots of other ways as the company develops. We can also directly connect investors with traders and stuff like that. But for now, the major plan is to have a fund based on the index.
Awesome. Jack, what can I say? Great stuff so far. I'm loving this conversation, but we're not done yet. I have some rapid fire questions if you're ready for those.
Sure, shoot.
All right, everybody, our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Jack, what trader has influenced your life the most and why?
Well, it's an amalgam of traders I interviewed, but if I'm pressed, I always say Bruce Kovner because he had one line in his book that has become the most important principle for me, and that was always, essentially, I'm not going to, instead of paraphrasing it, the bottom line is know where you're going to get out before you get in. That's actually, and that might be the exact way he said it, but that's the message. Know where you're going to get out before you get in.
What was one of the hardest things that you've had to overcome in trading?
The fact I was a horrible trader. I did everything wrong in the beginning. So just the complete lack of understanding of money management. Using what for me was the wrong methodology with fundamental analysis. So a lot of things. But those are two big ones.
How has your trading process evolved over the years?
I started as a fundamentalist, went to chart-oriented trading, then went to systematic trading, and then went back to chart-oriented trading. So that's how it's evolved, basic for me. But that's just me. So everybody should expect a different course. It's going to be different for everybody.
What is one attribute that you believe every trader should have?
Money management.
Besides your book, Jack, what's your favorite book about trading or the markets?
I guess a single book which is I would say maybe most important with Nassim Taleb's Fooled by Randomness. I mean, all his books are, I think are worthwhile and good. And I know it's probably not his favorite book, but, Fooled by Randomness, I think, has some very important messages to understanding the difference between luck and method, and true skill and how people confuse the two. So that's one I would always recommend. And also Michael Lewis, just for sheer entertainment. His books, all his books, but the ones he's done in trading, The Big Short, the Liar's Poker. They're great fun, and I love them. What's
your favorite movie or TV show about trading or the markets?
Oh God, there's not that. There haven't been really good. Well, we were talking previously. There was a documentary done on the death of the floors, which was called Floored. Probably hard to find. Floored, for an ED ending. But it was very good. That was very good. But there haven't been. There haven't been really. Trading Places was a fun movie, and it's about futures. It's really a fun movie, but. You do kind of, if you're really in the industry, you do tear your hair out when they have stuff like May Wheat. Why couldn't they? Not May Wheat, June Wheat. I meant to say, June Wheat. Why couldn't they take the trouble to find out, the right contract months, or there's other things that or watching TV in the pits. I know it makes good maybe cinema, but it's so far from what actually happens, and it's a comedy, but still. I guess at least it's a fun movie and it does deal with futures. But there haven't been, I can't think of any really movies about trading or that have been, really, wow, that's really, a great movie. There haven't been that many.
No, I mean, I talked at the beginning about how your book is the favorite of the majority of the guests that I've had on this show, and Trading Places is the favorite movie. And you'd think for a movie, after all these years that Trading Places has been out, they have not been able to do anything better since then. It's pretty incredible.
And I question how much it is because of the trading aspect than it is because that's just Eddie Murphy's best movie. I mean, it was a fun movie, and Dan Aykroyd. I mean, it's just a fun movie, and I think that may swamp it is about trading, but the reason I think traders may pick it is because there aren't that many movies about trading, and that's a movie you remember because at least it was a fun movie.
Yeah, Jack, what was the best piece of advice that you've received about trading? I
said if I had to bring it down to a single one, it was that Bruce Kovner line. So if I That would be the single best one. And a lot of traders, though, had similar messages in different ways. But when we talk about one, and let me just expound a little bit since we're, instead of just repeating. The reason why that's so important, know where you're going to get out before you get in, well, it's two real important reasons. One, it forces money management. It's a very effective money management tool. Secondly, it makes you make the decision about liquidating a position while you have complete objectivity. Once you get into the trade, that objectivity is out the window. The only time you're completely objective is when you don't have a market position. So deciding where you're going to get out, meaning deciding when you're wrong before you take the trade, is very, very important. And it's another trader that brought up the exact same message in an important way, and it may even take up a couple of pages of the interview, was Kyle Moshe in Hedge Fund Market Wizards. So that message has come up, more than once, but it is a really important message.
Now, Jack, if you could give the younger you advice after everything you've learned about trading in the markets, what would it be?
What would I? Yeah. So the key things I would say would be, the methodology I think you have to discover. So even, that would be cheating for me to say, well, go to this, don't do fundamentals. You have to discover that. But the most important thing is really that money management is more important than whatever method. Money management is the most important thing. You have to, fully embrace that and understand that.
Last question for today, Jack. What's your favorite thing to do when you're not writing books, trading, or working on FundSeeder?
Sure, that depends on the season. Okay, so if it's all sport. It's all outdoors and sports. So my favorite activity is cross country skiing. Obviously, going to do that in the winter. I love kayaking as well. I love hiking. So those are my favorite. Those are the favorite things.
Jack, where could people find you on Twitter, and give us a website to check out?
Sure. Well, FundSeeder, fundseeder.com, FundSeeder, ER ending, one word, .com. My own website is jackschwager.com. And Twitter is @JackSchwager. One thing I should add, very relevant, is, my books have gone into audio like a lot of books have gone into it. And so all the Market Wizard books were done in audio, including Market Wizards. But some recordings, were excellent, some, less so. Now, the very best recording was the new Market Wizards. I had a phenomenal narrator, and you could see it in the ratings of the narration. And my worst narration, I thought, was the original Market Wizards on audio. The narrator who did new Market Wizards, I now just recently renegotiated with him to do Market Wizards. So he's currently producing Market Wizards in audio, and he is absolutely phenomenal because he when there's a conversation, he kind of gets two different voices, and he puts the proper tonation into things, and it's more fun, I think, than reading the book. So I just want to make the audience aware that there's going to be a new audio book of Market Wizards that will probably be available in about 2 months.
What can I say, Jack? This was awesome. It was so great speaking with you today. Everybody go follow him on Twitter. Check out his books, from all of his websites, FundSeeder. Jack, thank you so much for coming on Futures Radio Show today.
It was fun doing some good questions. I appreciate it.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com. and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.